What is good, guys? It's Ray J back with another video, and in this one I want to break down what's going on with Tesla, SPY, Nvidia, the QQQ, and a couple of other tickers. I'm going to break down why tomorrow is going to be a very important day, as well as we have the big bank earnings coming out, what seasonality suggests about the market, and what's going on with the max pains of different tickers alongside the data coming out for tomorrow. So there's going to be a lot to discuss in this video. I'm going to break down why on earth all this stuff is so important for the markets. But before I do anything like this, let me just mention a couple of things. I am personally not a financial planner, so take nothing I say as financial advice. And also, if you guys can, please check out the Moomoo link, which is down below and in the description. If you sign up for Moomoo, the link down below, and deposit $100 into the account, you are guaranteed up to 5 free stocks. The offer ends in just 3 days, so check it out before they run out. Anyways, let's break down what's going on with the market. So when we look at SPY and Tesla and all these different tickers, we basically saw the market start off a little weak. Then we got a nice bounce as time went on. We were talking about that in the morning. And the market was holding up quite nicely in the beginning alongside Tesla, pushing back up to 265 for the first half of the day. And then finally, we got this sell off that happened. As the sell off was going on, I warned everyone that Tesla could continue to decline, especially if we broke below 260. And that's what ended up happening, as it ended up holding this 257 area, which is the level we called out. So looking at Tesla, this is looking a bit more bearish from a technical standpoint, but just notes that technicals are not going to be everything as we have big bank earnings. However, I will break down what technicals suggest about the market, what's likely going to happen, and what's happening with these earnings, which are going to be very important. First, let's talk about seasonality. Why on earth is this so important? Well, the market has a tendency of moving in cycles. That is something that's important to remember. Historically, August tends to be a little bit of a weaker month. September tends to be even weaker, and that's what happened this year. October tends to be when the market bottomed, and the market did make its low over the last few months during the month of October. So it just happened last week. And the question is, what does this suggest for the future? Well, what tends to happen in October is the market tends to drop a bit. Then we tend to see some bullish price action for the first 2 weeks or so. And then during the third week, or very close to that period, we tend to see the market decline a bit. We tend to see either the market establish a higher low or make a new low before the bullish rally for November/December. I believe that as long as there's no really bearish black swan event that comes out, the market should rally quite nicely for November and December. There's a high probability of that happening. But before that happens, we tend to get one more sell off during the final weeks of October, and there's a chance that could be starting very soon. That is what seasonality is suggesting. So this is going to depend on earnings, of course, and other factors. The market is expecting earnings to be down 2.1% relative to the previous quarter. We're going to see if that ends up being the case and what the effects of the rate hikes are on earnings. We're also going to be finding out how guidances are looking, which are going to be very important. So going forward, guys, I just wanted to mention that we have some big bank earnings. JP Morgan Chase is expected to see growth decline by 4.4%. BlackRock is expected to see an increase in earnings by 8.3% overall. Citi with a very, very big decline. Same thing with Wells Fargo and PNC. Now, what I do find suspicious about these estimates from earnings is that a lot of them have been lowered quite a bit. It's almost as if we're expecting some declines, but they're lowering the bar so much so that the earnings don't look as bad. There's a possibility that that's what's going on. We will find out tomorrow before the market opens. I would say maybe 30 minutes before open or so. So make sure you watch for my video coming out tomorrow morning where I will talk about this and we will see how this affects the markets. Now, besides earnings that are coming out for the big banks, those are going to be very important for the market. And once again, guys, let me just mention, if we get really bad earnings, the market's going to likely sink. If we get decent earnings, the market could still try to hold up temporarily. And then if we get really good earnings, the market could bounce quite a bit, at least to start us off. And then things could change later on, of course, as the day goes on. But I'm just talking about the initial move. Now, after all the earnings come out, the market's going to open at the normal time. Then 30 minutes after the market opens, we have the Michigan Consumer Sentiment Report, the 5-year inflationary expectations and stuff. Basically, 30 minutes after open, expect some high volatility as more data is coming out when it comes to consumer sentiment and what we expect from inflation. Now, I just wanted to mention that when it comes to max pain, Tesla's max pain is 260 for tomorrow. That's going to be the final day of the week. For Nvidia's, it's at 452. Someone in the comments brought up a very good point about bringing these up. So sure, I'll bring this up. And then on top of that, we happen to see SPY with a max pain of about 430 for tomorrow. So most of these equities have declining looking projections looking at max pain. Max pain tends to be lower than where we are for SPY and Nvidia. For Tesla, it's very close to where we are, but things could always change depending on the market. Tesla also had about 111 million in volume, and also looking at some other pieces of data, Citigroup is neutral on Tesla. The price price ratio is kind of flat as Tesla is performing quite equally with the markets. And finally, I just wanted to mention that the shorting went up just a little bit as we saw 34 million Tesla shares shorted. All right, anyways, now let's talk about the charts. What are the charts suggesting from this point on? Tesla has a potential flag developing. It's been on a slight downtrend over the last 2 days. And now we could, in my opinion, draw out this channel that is looking very, very keen. So this suggests, from a technical analysis perspective, there could be a little bounce coming before the market declines even more. And this could end up causing Tesla to pop, then drop once again. Now, if we're super bullish after the bank earnings comes out, we could see the market try to push up if we get good numbers. This could help Tesla push up towards this resistance right here. And if that's the case, I mean, that would be quite decent for Tesla. We try to get some kind of rebound, but there's no guarantee it's going to last. Looking at Max Pain on SPY and etc., as the market could still sell off more. Now, if we get bad earnings, obviously Tesla's going to likely sink even lower, and we could see this thing decline towards the lower 250s. And last but not least, if we get mixed earnings, which I think is the most likely possibility, I think that the technicals align with us possibly getting a pump on Tesla, retest of 260. 262 could get retested, then a rejection, and this thing coming all the way back down to 257, possibly even below that towards 255. If we break below 257, watch this thing drop towards 255. Then we have this imbalance towards 253, and then below that we have the notorious 252.5 followed by 250. Those are supports. If Tesla could hold above 260, there is potential for it to try to break this resistance. If we can manage to get above 262.5 and hold it, 265 does become a possibility. Now, the most likely case, once again, would be Tesla kind of like popping, then dropping as time goes on, maintaining this channel, and maybe retesting the very low 260s, rejecting off that, then slowing down towards 257, and then maybe failing towards 250. That's the most likely possibility based off technical analysis. I'm not promising it though, because it depends on their earnings, but I just want to make that as clear as possible. For SPY, okay, the bullish case would be us holding above 436 to push back up to 437.5. The bearish case would be us breaking below 431 to push down towards 430, if not 428. What's the most likely possibility? Well, I'm kind of eyeing a possible head and shoulders here. This could be like a left shoulder ahead forming. So we could be forming like a right shoulder right here for a little push up, maybe thanks to the earnings in the morning. Then a decline, at least technicals do suggest this is a possibility. Then the market kind of like sells off towards the end of the day down here, and we just see the market do something like this and close very close to where max pain is at 430. This is the most likely technical analysis perspective, another big sell-off coming, but not a guarantee. I can't promise it until we see earnings. So we will see what happens with earnings if we get the bullish or bearish case, but just know the most likely possibility is a pop then a drop looking at the market. For the QQQ, it's the same thing. If we're bullish, you want to see this thing hold above 372. If you're bearish, you want to see it break below 368. The most likely case is going to be this thing trying to like push up a little bit, maybe towards 371, which is where we have this possible left shoulder ahead. Maybe a right shoulder is going to form around 371. We reject off that, then start sinking towards 366. That is the most likely case, but always be prepared for anything as we have earnings coming out, and anything could happen with that. For Nvidia, this is looking a little bit more a little indecisive, but at the same time a bit bearish. So what's a little bearish is the fact that we broke this low. Nvidia came down to where the support was, and it could be making lower highs and lower lows from this point just temporarily. But what's good about it is it's still holding support quite decently. So on Nvidia, if we're bullish, you want to see it hold above 470 and then break above this trend line around 472 tomorrow. If it could hold above that, there's a chance the bulls could try to push it higher. If we're bearish, you want to see Nvidia break below this trend line right here, below 466 to 465. If that breaks, I could see it coming all the way down towards 461. And if that fails, it's going to come down to this trend line down here towards the very low 450s, which is a real possibility. Also, remember that Nvidia has this gap down here, this gap all the way down towards 458. So there's a chance Nvidia could come down to fill that gap soon. So what do I think is the most likely possibility? I went over the bullish case, the bearish case, but the most likely case would be Nvidia kind of pushing towards the low 470s, then maybe rejecting, coming back down towards this trend line right here at 467. Then we might fail right here and eventually come down to 465 and then eventually 461. I think it may be tested for tomorrow. Max pain happens to be around that much lower levels, so there's a chance we could get very close to it. I don't know if we're going to close at it, but keep that in the back of your mind. We have this gap down here that could get filled soon. So downside seems imminent for Nvidia. We're going to be watching that very carefully. Finally, the last stock I'm going to be talking about on trading view is going to be Aapl. There's a possible rising wedge on Aapl, but there's no confirmation of it breaking down. If we break and hold below 180, that's going to be bearish. If we break and hold above 181.5, we could get another push for 182.5. What is the most likely possibility with the bank earnings coming out? Technicals suggest this thing may try to push a little higher towards 181.5, maybe a little higher than that, and then reject. If it breaks below this trend line, which I believe it eventually will do, we could see this thing sink below 180 towards 178. My guts tells me Apple is holding up for now, but it's going to eventually see some downside based off seasonality and these different factors. So we will have to wait and see. Finally, guys, I just wanted to talk about just a few other tickers very, very quickly. I want to make this video very brief. So for the IWM or the Russell 2000, if we're bullish, you want to see it break above 173. If you're bearish, you want to see it break below 170. My gut tells me it's going to pop a little bit, then eventually break down towards 169 or below that. Looking at Microsoft, if you're bullish, you want to see it hold these levels. If you're bearish, you want to see it break below 330. There's a bearish divergence on it, so it looks to me like it may pop a little bit, then come right back down below 329 to test 325 very, very soon. For AMD, it's very flat, didn't really do much, but there is a bearish divergence, which tells me the most likely possibility is 105. Unless it holds above 110, I believe the most likely case is going to be 105. Looking at the VIX, this is also looking like it's trying to hold this support at the 200 EMA. We will see if this holds or not. It had a slight bullish divergence that formed today. So if the VIX does try to respect an uptrend, we need to see it hold above 17.38. If it does so, that could be bearish for the market. So we will have to wait and see. The dollar is at resistance right now. This resistance happens to be around the head and shoulders pattern. So we have this resistance right here. We will see if the dollar could break where we currently are or not. If it breaks this, that's going to be bearish for the markets. If it fails, that could lead to the opposite. Coinbase is looking a little weak right now. We actually have a head and shoulders like pattern. It looks like it's going to be heading towards 72 very soon on a slight decline. For Google, it looks a bit bearish as well. We have a bearish divergence that developed right here. It looks like it's forming like a bear flag, so it could end up breaking below 139.9. If that's the case, it's going to come down towards the 138.5 area. The 10-year Treasury yield is trying to bounce, but it's at resistance. If it could manage to hold above 47.25, we could see this thing push to fill this gap at 48. If this thing pushes higher, that could become bearish for the stock market. So there's a gap above on the 10-year, which gives me the possibility of downside. Amazon has a bearish divergence. I'm expecting this thing to likely come down, but we need confirmation first. So we need to see this break below 131.8 or the 200 EMA. The odds do favor that for it to retest 130.3. So I think the odds favor that. And last but not least, for Meta, it looks a bit more bearish as we're seeing this thing decline. We're going to be watching 321. If that fails, it's going to come all the way down towards 318. So watch these levels very carefully, guys. I want to make this as brief as possible. Anything could happen tomorrow depending on the earnings, but just know from a technical standpoint, the market's looking a bit more bearish. Seasonality also supports this. So get ready. I will talk more about the bank earnings for tomorrow. I really hope that this video was just very helpful for you guys. I know I tried to make this kind of short, but I'm trying to get as much information in here as possible. All right, guys, have a great day. Remain calm, cool, and collected, and I will see you guys tomorrow to talk about the bank earnings. Thank you, and peace out.